Is Trump's Venezuela plan destined to be a massive failure? Why did the world's biggest oil giants turn their backs on a $100 billion deal? Let's dive into the shocking truth behind the headlines. Trump's recent moves in Venezuela have sent shockwaves across the globe, especially when he declared that the United States would seize control of Venezuela's oil and funnel all profits to American companies. But the real plot twist came when industry leaders like ExxonMobil and Chevron effectively killed the plan. ExxonMobil CEO Darren Woods stated clearly that under current conditions, Venezuela is simply uninvestable. Trump wants Venezuela to ditch China and Russia to partner exclusively with America, but these corporations are terrified that their assets will be seized once again, just like in the past. Trump promises a $100 billion investment, but the reality on the ground is that fixing the infrastructure will take years, and Trump might not even be in office by then. Plus, his unpredictable nature and erratic tweets represent a massive risk for these companies. Even Chevron, which already has a presence there, is being extremely cautious. Trump's military might is on full display, but he cannot control the economic reality, and that is why this operation will likely go down in history as far less successful than it appears today. Imagine a world where a single military operation topples a regime and hands the keys to the world's largest oil reserves to the United States overnight. This isn't some Hollywood movie plot. This was the literal reality Donald Trump tried to manufacture. But while the White House was ready to declare victory, the oil executives were already planning their exit. The strategy was built on brutal efficiency, removing the leader, moving him to a New York prison, and using the Navy to blockade the tankers. Marco Rubio even told Congress that they could force Venezuela's hand because the tankers were full and had nowhere else to go. By seizing these vessels, even those pretending to be Russian, the U.S. could turn off the country's money. Within weeks, the country would be broke, the military would stop getting paid, and the regime would collapse. But this vision hit a wall of corporate reality when Darren Woods looked the president in the eye and delivered a blunt reality check. The problem wasn't just about money, it was about decades of history and the total lack of stability. Oil is a long-term game, and these companies aren't willing to bet billions on a president whose foreign policy can change with a single tweet. They fear a future government will just kick them out again, and without ironclad guarantees or compensation for past losses, the big players are staying away. In the end, while Trump can use force, he cannot force the market to ignore the risks of his own behavior, making the whole operation look a lot less impressive in the long run than it did in those first few hours after the coup.